Okay, since you used the R word, can you talk a little bit about the chances of recession and how the war has affected those chances?
Absolutely. Absolutely. So as you can see on the screen, if I can just click this sucker, there you go. Goldman Sachs has now updated its chances of a US recession to 20 to 35%. I'm guessing that Goldman, like me, is watching the yield curve flattening, right? So the 2-year Treasury and 10-year Treasury are getting closer together. When the yield curve inverts, I think 35% is more likely. So watch for that for those who know what that means. But right now, I think 20 is the most likely number. Now, keep in mind that US recession chances are heavily dependent on two factors. First, how long the war lasts. As you know, the Russians are getting a royal butt kicking. So the Brits think that the Russians will start to lose if they don't declare a truce in the next 2 weeks. But if they or the Ukrainians stay stubborn and the war drags out into May or June, then the chances of recession go up. And the second element is oil. If the Russians try chemical weapons, the oil taps will get turned off for the Eurozone and Asia. Oil would then go to $200 a barrel, and then even a 35% chance of recession, even that might be too low. Now, one thing I like to do is I do like to balance out bad news with, because I'm speculating, right? I'm speculating about bad news. I might as well speculate about good news. So here's a very interesting infographic. This is from Global Times. Did you know that even though the price of oil is hammering everyone, including us, we're actually the biggest beneficiary of the Ukraine war worldwide? And I know it sounds heartless, right? But yeah, blame Putin for the war, not us. We have nothing to do with this war. So here's 4 different ways in which the US economy benefits from the war. Top of the screen. It's very likely that the US will sell a lot more natural gas to Europe. The Europeans desperately want to stop buying Russian gas. They're being blackmailed. And the US is about to have the biggest natural gas production year ever in 2022. So maybe the Europeans will finally start buying our natural gas instead of buying it from the enemy. Second, we've already seen the dollar strengthen. Because the Eurozone has to pay more for oil and they've got a war going on, money is flowing from Europe to the United States. As a result, today, the US dollar buys 2.5% more than it did 1 month ago. This is reverse inflation because our buying power is increasing, right? Third, Russia and the Eurozone, they've got $282 billion a year in trade. We only have $34 billion in trade with the Eurozone. They don't like us much, by the way. But now they're in trouble. Now they've got an enemy that's at their doorstep. Guess who can step into the vacuum? Good old-fashioned American capitalism. And finally, every major European economy is now preparing to increase their defense spend. Germany alone, $100 billion more. And old Uncle Sam happens to sell more weapons than anyone else in the world. Oh, and Russia, the world's #2 arms manufacturer, is now a pariah and completely out of the picture. That has to be good for us, Anna. In fact, I wonder how all the defense ETF funds are doing. Hint, hint, for those of you that invest in the stock market, doing well, right? One last data point, right? I want to show you a video. And this video does a wonderful job in 1 minute of explaining why we are the most insulated from the headwinds that are hitting the world economy. So take a look at this video.
Our next guest calls the U.S. the ultimate safe haven. Joe Zeidel is Blackstone's chief investment strategist. Joe, great to have you with us. First of all, I want to ask you, has your investment outlook in terms of the U.S. being the safe haven here, has that changed given the geopolitics?
No, and first off, thank you for having me. And we want to acknowledge the humanitarian tragedy that is taking place in Ukraine. But in terms of an economic impact, or as we think about a fallout from it, most of the world had already been dealing with a number of headwinds, from higher input prices, from commodities and oil, to coordinated central bank hikes. And our view had been that the U.S. was an island of growth because the U.S. is only one of the only major economies in the world that has this cushion of $6 trillion in stimulus. That is
island of growth, $6 trillion in stimulus. You guys really need to understand why that's so important.
It effectively been created, more or less out of thin air over the course of the last 22 months or so. And, that sits on household and corporate balance sheets. And it means that the U.S. has this tremendous cushion for growth. as the rest of the world faces these headwinds. So I think there are risks that we'll see, higher inflationary numbers, not only from higher oil prices, but also commodities. And I think that presents a greater headwind to the rest of the world. We don't expect the rest of the world or G7 countries or Europe to enter a recession as a result of the higher oil prices, but we think it will be a headwind to growth. And I think the US is one of the most insulated from those headwinds.
Nice. Back to you, Anna.